Talking investment now, Mohab Mufti is the CEO of Asiya Investments, based here in Dubai. It's an Asia-focused investment firm. Mohab, good morning. Thank you for coming in.
Good morning.
It's nice to see you here. You've not been here for, a year or so when things were set up. I think it was May last year, middle of May.
That's right, yeah.
Last year. Essentially, you have, let's start with a new report, if you like, and it really deals with the GCC, now the largest energy exporter to Korea, is the central element of the report, and it reflects, I suppose, changing dynamics, doesn't it, in the region? You've, traditionally linked closely to the G3, and we are really now moving almost exclusively to emerging Asia. That's the central thesis, isn't it?
Absolutely. I mean, just to cast our minds back to 1990, trade between the GCC and the G3 accounted for about 45% of GCC trade, whereas with emerging Asia, it was only about 15%. 23 years later, that situation has almost reversed, where trade with the G3 is at 25% of total GCC trade versus 45% now with emerging Asia. So that is just growing at a fast rate continuously, and obviously largely because of the growing demand in Asia for energy.
I mean, you launched in May, it was May the 15th in Dubai within the DIFC. Your organisation, Asiya Investments, is a wholly owned subsidiary of the Kuwaiti company KCIC, which is the Kuwait China Investment Authority company. It's the first GCC-based Asia-focused investment company. Now, you've just opened an office in Hong Kong, and your whole investment management team is now based there. There's clearly, backs up the previous point, doesn't it? Clearly the shift is more than emerging.
Absolutely. We had, we saw so much demand for a combination of, being a local trusted advisor, but having your feet firmly on the ground in emerging Asia. And that's why we moved our entire investment management team into Hong Kong and have added to it from the region since then. So now we have over 20 people there. And in fact, we're having our kind of ceremonial reception to celebrate that on September 18th.
Well, congratulations on that. Let's just very briefly look at, you launched in May, as we said, in DIFC last year. Talk us through, if you can, the last 14 or 15 months.
Well, what we've seen is a combination of a lot of interest from the region about investing in Asia, or in emerging Asia specifically, in different ways. Some people have been looking simply to just diversify their equity portfolios and are looking for new equity managers as their demand for that exposure grows. Others are, especially amongst the high net worth in the Middle East, are looking for more direct investments where they have a sort of more direct relationship with the company that they're investing in, and maybe having a strategic alliance of some sort. Others have actually just been looking for new ways of generating high regular income. So, for example, we launched an Asia Islamic Trade Finance Fund specifically to provide people with regular income being generated by financing Asian trade.
Looking at Indochina, the old Indochina, we're talking about Korea and Vietnam, and looking at some of the business opportunities there. Can you tell us whether you're looking into that sector to do any expansion work?
We're focusing a lot on Korea, not so much on Vietnam, to be honest, because our focus is on more, what you'd call the emerging or the newly developed markets in Asia, as opposed to Vietnam, which would be considered much more frontier still. But in Korea, really, the relationship between the GCC and Korea is getting deeper, simply because, again, of their heavy reliance on oil imports and energy imports in general from the Gulf. So that's giving us access to invest there, and because of the growing domestic demand within Korea, we tend to focus on sectors that rely more on that as opposed to on the export market, which is obviously suffering given the global slowdown. Whereas in Korea and South Korea and other parts of emerging Asia, domestic demand has really been the driver. So we focus there on consumption, on the consumer market. We concentrate on real estate, energy sector, obviously, infrastructure in general. Any sector and any business really that is going to be more dependent on demand from within as opposed to dependent on demand from the rest of the world.
That's really where I was going with that, and with the energy sector, because there's a constant they're living in a constant shortage, so there must be some great business opportunities to go into there for investors.
Sure, and what's interesting is that a lot of them are also trying to diversify by looking for investment opportunities in the GCC. So we're not just seeing, one-way traffic of Gulf money looking for a home. We're seeing a lot of businesses in South Korea and elsewhere coming to us and asking us, how do we get involved in this growth story of the GCC? How can we help and participate with money as opposed to just, labor force?
I guess by the same token, it goes the other way. I mean, according to the Energy Information Administration, China is expected to be the world's largest net oil importer before the end of the year. China's not the only country, though, heading in that direction. India, newly industrialized economies like South Korea, Taiwan, quickly catching up. Just under half of the world's top 10 net oil importers come from emerging Asia. So what does the region need to do, I guess, to guarantee that slice of the pie going forward?
Well, I mean, as ever with energy, there's only so much you can do. A lot of the demand for energy is dependent on the economic factors within the countries that are buying them. But having said that, what we've noticed is that there's a much more sort of personal quality to the relationship between the Gulf states and emerging Asia. There's so many more visits happening at state level and at private level between the region. I'm trying to remember a statistic off the top of my head, but something like 10 years ago there were just so many handful of flights from the Gulf to China every week, and now there's I think over 50 flights a week at least. So the simple answer is really just seeing each other more and more dialogue, and frankly, one of the reasons why I personally was interested in this venture is when I used to work in the city in London, we used to see a lot of Gulf businessmen coming to London either for business locally or in Europe or in the States on their way to the States. And then I started noticing that not so many of them were coming, and I was asking them, where are you guys? And they said, well, actually, we're on our way to Dubai to go to Hong Kong or to go to Philippines or Asia in general. So hence, this is what prompted the move, I think.
And therein lies the opportunity. But I mean, it's amazing, even now, even still in this age of modern communication, it's the boots on the ground approach. It is the face-to-face, isn't it? It
is fascinating. I mean, one would have thought that technology would have, reduced, for example, air travel. But what's happened is because it's now easier to make friends internationally, sure, you tend to want to go and see them eventually.
There's nothing wrong with international friends. Mohab Mufti is the CEO of Asiya Investments, based here in Dubai. It's been fascinating. Thanks for coming in.
My pleasure.